Hey, welcome everyone. We had a quick question on how did the algo optimizer do today in the violent world of crude oil trading, and how did it uphold in S&Ps, and what do we see with the volatility, the VIX, the market movement here? First and foremost, we'll go through and share with you some days. The system does not trade all night long. So the first trade out of the box was a short. It hit the profit target pretty well, and it trails a stop on the balance and then protects it in case it runs away. So bottom line, in this trade example right here, it would have done better getting out of both trades. It does two lots at the intended profit target, which is the blue line. Since it was in a trailing stop function feature, it did not reverse and go long, so it missed this little leg to the upside. But as you can see clearly, it caught the downside short, got out of half the potential, the profit at the intended profit target. It trailed the stop on the balance, so there was another profitable trade. Here's one where it went short. It just completely got stopped out. It went short. Two contracts, it's still short one. So the question now begs, here's your intended profit target. Amazing how it just gets out and then allows the market traded through the profit target. So it's pretty amazing product if you figure out how it calculates these intraday swings. And we go over here to format system, and we have algo 16. So basically, we are, designed to trade only between 6:45 and 2:35 in the afternoon, and there's just a bunch of parameters that we've optimized in there. Many of you know about the Algo Optimizer, but as it stands right now, it'll obviously kick out a long trade, and here is the neat thing with the crude oil. Here's your entry, here's your initial risk, and then the orange is the last conditional change in the trailing stop. And here's now a new last conditional change, which it will eventually, if the market trades up and beyond that little orange grayish line right here, that's the trailing stop function will kick in on the short that was presented right here. So it's sold to, as you can see, and it just basically covered one, so one half of the trade. So that's how we handled crude oil today. Not a big of day as yesterday, but this is closed at profit, so it's not including the current trade that's on the books. This was yesterday's performance. Again, this is two lots. I like this percent profitable of the trades, 85, and then yesterday 83, so that's pretty good. So not a bad situation. Yesterday was just a very dynamic day. Today, even though it looks like it was a dynamic day, if you think about the time frame that which we are trading, the market really lit itself up to, from about that 68.70 handle area up to 69.60. So it went up 90 cents, down 90 cents, and chopped around for most of the day. While we were listening to what was going on in the Senate hearings between Jack Dorsey with Twitter, and then we had Google, then we've got the Brett Kavanaugh Supreme Court hearings going on, there really wasn't a whole lot else to trade off of today other than that. Let's take a gander of what I was referencing. Advanced decline information. It's as it gets close to 20 minutes into the day. Today was one of the strangest days in several facets. The E-mini S&Ps at one point was down 18 handles at one point in the day, and the advanced decline was more positive than negative. And the advanced decline in the S&P 500 is 295 stocks are positive, 203 are negative. The advanced decline, look what it's doing. It's upticking on a negative day. Pretty strange, not that bearish. This suggests to me there might just be a shallow few-day pullback, looking for a maybe one more attack to the upside, a continuation. Another interesting observation was over here in the Russell, by the way, gang. We had the advanced decline cumulative line was all the way down here first thing this morning. And look what it did. This is a simple moving average. The market came down to test moving average and bounced off of it. And I'm here to tell you, I think that in an environment like this, more times than not, when a market sells off and the market internals look really negative at one point in the day, and then they come back to being less negative and people are short in the hole, that's a lot of pain. And usually the market wants to do what? Trick as many people as possible. I would not be surprised that we try and launch for one more new high and squeeze every last living bear who sold short the low of the day in the Russell. I hope it wasn't you. we were talking about that earlier today in our trading room. Hey gang, this is really bizarre. We can't be looking to take sell signals down here. We're close to old support, number one. Number two, the advanced decline analysis was too strong. The Qs, that's a different tale and a different beast entirely get together. The advanced decline is weakening structure. The advanced decline is weakening on the composite. We've got daily sell signals over here, and I think that's partly why we're dealing with a sell signal there versus no sell signals in the Dow. What do I credit that to? Well, look at all the software application sector stocks. Adobe, I'll take you there right now so we can kind of check some of this stuff. Social media, 4% in Momo, Twitter, Yelp, Netflix, down $21. Despite maybe news that they're losing subscribers, I'm not saying it's kind of like the political agenda of hiring the Obamas. I'm not sure what it is, but Netflix got a little more extra downside. Look at Alibaba right there. Alibaba to the downside. Baidu, all of the Chinese connection sector stocks were down hard and heavy. And then again, Google, as they sat in front of representatives in front of the Senate, Congress subcommittee hearings. PayPal, this is the one I really want to show you, though, is Adobe. Square even. Love Square. I think it's a little over-accelerated in price for this point in time, and I certainly invite a pullback of biblical proportions to be a buyer or add on to a position. Square is definitely a product of relative strength. The PMC is certainly dynamic in this, as was my person volume indicator. So, I don't think today is a big deal unless you bought it yesterday or today on the open. And if you're buying a parabolic breakout like that without a setback or correction, then you maybe should decide to take one of our trading courses that may help you. Buying breakouts up to a degree until the market reaches like resistance. But what I wanted to just point out, what is causing the relative weakness in the NASDAQ 100? And of course, those two sectors kind of spell it out. A couple of airlines, some of them did real well. It's funny, the puppy killer was doing really great. That's United Airline. Remember, they French Bulldog met its fate because of one really poor employee, but also they kind of called the security guards in Chicago on that doctor and hauled his ass off first class seat. Just crazy stuff, but yet the stock's rewarded by shareholders and more profits because today they did trade at a new all-time high. Here's part of the other puzzle about the Qs, the mixed tail of the tape. Biotech's not really strong today. You take a look at a stock like Regeneron. Regeneron's up 0.6%. A $400 stock's up $2, which is like pennies, right? No big deal. But utilities was the big thing. Department stores not really getting a lot of help today. Consumer discretionary, it's mixed here. You can see, just look at the red and the green. Look at the green and look at the percentages. This is consumer staples. Consumer staples, a lot of them. Kimberly-Clark, Philip Morris, Colgate-Palmolive. You can see some of them are doing quite well, and we're starting to see maybe a little rotation. What I like to see is this graphic depiction right here of the person market catcher. If you take a look at this right here, this is the strength of the person's market catcher. Fuchsia is good. It means it's getting better. Bright blue is best. It means the market's outperforming the broad market. So we look for stocks that have buy signals, that are in daily buy signal, that have fuchsia moves like this. Those are buy signals like Philip Morris is in. That's good quality signals right there. This is Hormel. Hormel, case in point. The relative strength, bright blue, it's in a buy mode. It's in a person's pivot, weekly buy mode, and Hormel is off to the races. Man's best canned chili, as I've been telling clients. So anyway, that's kind of like the makeup of what's making the market today, the tail of the tape, so to speak. We can kind of sum it up by looking at this sector analysis top to bottom. Bitcoin, GBTC is the worst performing sector on the board today. Everything's mostly negative, but by teenies. Take a look at The small cap growth iShares IJT down 0.2%. Doesn't make me really. It doesn't move the dial. IYZ Telecoms down 0.5%. I mean, XOP down 0.7%. And then again, you come over here and you go, utilities are up, staples, that's defensive. Some drug stocks, especially, or excuse me, the XHB, the home builders, ITB are the home builders. And what I wanted to point out was that the healthcare, XLV, there it is, XLV's up a little bit. That could be in part to some healthcare providers. Like today, we have a little upside move here in Cardinal Health. So Cardinal Health, the relative strengths improvement. I mean, it looks like if I was going to rotate out of a frothy stock on the upside and look at perhaps a stock that could be a short-term basing action with improved relative strength, this comes to mind. So anyway, that's probably why we're seeing that divergence between why the blue chip Dow is up and why we see relative weakness in the technology. So that's the true tale of the tape. And again, as far as volatility is concerned, let's take a look at the VXX on the trading system here. All right, so the VXX, in all essence, is until we break out a consolidation, and that's basically what we're in. This is more what one of the models we use, which is identifying it's in a long position still. Unfortunately, if you look at today's high, which the number is 27, and you run all the way over here, the high back here on 817 was 28. And I'm talking decimalization here, okay? So 30.27 versus 30.28. This is a last conditional change resistance spot. Market's yet to close greater than or positive above that. It needs to close greater than or positive above that, and that would more than likely trigger more upside out of volatility. And inversely, since the market has several different areas of interest, we're kind of trapped in a little trading range. Pay attention to a number I'm giving out here, 28.85. On a 60-minute close below 28.85, that would be below support, a little trend line, and some other technical considerations. And yet that would also, knowing the system, more than likely trigger a downside short, which was what we like to take. We like to take sells after the market rallies or consolidation periods. We like to sell the VXX. And so that's kind of like what we're waiting for right now. But as you can see, we are trapped in limbo. And between the 28.85, which is what we've given out in our trading room, up against this last conditional change high up in here, man, it's in no man's land. It's right kind of in the middle of no man's land. And just as a reminder, sometimes we do go through these lulls in periods of volatility, and this is exactly kind of like what we would expected if you're in our trading room. We talked about this back over in this time period. This was about a 14-day window of where the market, quote-unquote, reset itself after an adjustment period of volatility. Here's a big adjustment period of volatility, and we are looking at, right now, 11 days. So, I mean, if patterns repeat themselves, I mean, you can only use this as a guide, right? If this is a short-term kind of trading range trap before we get into a new leg or breakdown, and if we do get a breakdown, we should take out not just the August lows, but tap into what the yearly low is around that 25.59 number. 25.59 is the annual low. Here we are nearing and had made newer highs on the year in spiders, and the VXX hasn't even taken out the August low, let alone the yearly low. So between contango crush and volatility factor, if the S&Ps rally and get back above the 29 even number for whatever reason, then this would kind of give us a sign of a breakdown, a close below 28.85, and the algo system will jump all over it and have already been short. So that's the neat thing about that. But I thought I would share with you some numbers, what we're looking at in the volatility index. I hope this information found you well. Everyone, have a great trading week, and we'll update you when I get requests to do so. Thanks, everybody.